Good afternoon, everybody. Welcome to our Short Verticals webcast. I'm Connie Hill. I'm happy that you would join me here today. We get together every week at this time to discuss short verticals. We're going to discuss something today that may, for some of you, alter the way you do a little bit of technical analysis on a stock that you're considering doing for a short verticals trade. All right, so we'll keep that in the bag for just a moment. I hope you're following me on X. I'm Connie Hill CS. Cameron May, who I'm glad is joining us out in the chat. He'll help catch maybe some questions I can't quite get to. He'll be in the chat, and he is on X as well. He is Cameron May CS, and we'll post educational content, things we're seeing maybe in the news or on charts. We'll share those ideas with you so that you are aware. Okay, let's go through our disclosures and get down to the agenda for the day. Options carry a high level of risk and are not suitable for all investors. What we talked about today is for general and educational purposes. Don't consider it a recommendation. We will be using the Paper Money software application. This is what you download to your computer. It's the most robust version of Thinkorswim. Investing involves risk, including the loss of principal. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An in-the-money amount option or an in-the-money option has a higher risk of being assigned early. One thing that's different between paper money and the live market is that paper money will not assign early. You need to know that it could happen, okay, at any time. Past performance is no guarantee of future results or success. All right. This is an intermediate level class, and so we're going to talk about short verticals in depth. So there's some assumptions that you understand short verticals to some extent, but I'll always do a little bit of teaching in this portion in case we have some new people coming along that are maybe just barely exposed to short verticals. You know, Cameron May, who's in our chat, teaches a class on Tuesdays called Getting Started with Options. Does a fabulous job with it, and he'll go through every single one of the option strategies, and he'll spend some time on both bullish and bearish short vertical trades. So if you feel like you need a little bit more understanding in that area, that would be a fantastic place for you to go. We can show you where that might be in a minute as well. We're always going to look at some trades. We're going to follow up on some example trades, but more of our time today is going to be spent putting some additional new trades into our portfolio. All right. As far as short verticals go, we have not had a lot of time that we could explore a lot of bearish type strategies or bearish verticals. So we're going to explore that a little bit here today. So we've done a lot of short put verticals for the bullish market. And the way that we take advantage of those credit spreads in a bearish market is to do the same thing we're doing, but just with calls. We're going to be selling call credit spreads. So what do we want to look for? We want to look for stocks that are downward trending or possibly in a kind of a neutral trend. But look for that previous trend there to be bearish. We want stocks with higher trading volumes because that's going to lead us to stocks that hopefully have a lot of open interest and volume activity. That's really good for an option trader to see, so you know there's lots of contracts being exchanged. That has a tendency to allow for what's called tighter bid-ask spread, which is, you know, the price between the bid price and the ask price, that it's small and doesn't take much stock movement to overcome that or much time decay. All right. As opposed to, man, if it's a big chunk, typically we want to avoid those types of scenarios on short verticals. Now, let's talk about timing here a little bit because we haven't spent much time on any bearish verticals yet, or recently, I should say. So we want to find something that is breaking down below support. Okay, we already know we want a downtrend, so we want it to be breaking support or maybe pulling back from resistance. Sometimes we might see a stock that has been running up. You know, here's this little downtrend, but maybe it's running up a little bit and then hits that resistance and begins to roll over. Resistance could be horizontal, diagonal, it could be a moving average, could be part of a channel, okay? And then many of you are familiar with this, a close below the low of the high day, which essentially is when this little stock runs up, where's the high day? And when it bounces down, how big of a bounce do we want to see? Well, we'd love to see it below the low of the high candle day. So we'll look at that in a little bit of depth here today and take a look at that. Let's do this. Let me go ahead and clear my screen up here. Pat says you are a newbie from Vancouver, Washington. Sweet. And you like short verticals? Well, you are in the right class because that's all we're going to do. We live and breathe and trade short verticals. So let's get on over to, I'm going to hop over to Thinkorswim. And on Thinkorswim, I've just got the SPX chart up here. The blue line is my 10-period moving average, so giving us guidance in the short-term trend. This red line is a 30-period moving average, and traders may use a 30, a 40, or a 50, so it's kind of at the short end of that, looking for maybe a little bit more recent reaction to price change. But you can see the 30s headed up, the 10 maybe a little bit sideways on the SPX. It's not like it's been sideways for a long period of time, maybe just flattening out here a little bit, because it was just last week it set another brand new all-time high, which it had been doing over the past several weeks. We've been seeing all sorts of news highs on the SPX as well as the NDX. Let's pull the NDX up here now. And so on the NASDAQ, similar type thing. When we had this pullback in the market last week, came down to about the 30, didn't go much lower than that. I mean, it did a little bit, but not a ton. And then it seems to have rallied back up here. So our 30-day is headed up. Our 10-day is a little bit flat here, but price action is still above the 10-day, which would be a little bit more on the bullish side of things. We'll have to see. One thing that I am looking out for is I am looking to see if maybe today's candle, if it is a kind of a top of a nice little surge, and seeing if it rolls over again. If it does, we're going to have a slightly lower high, okay, slightly higher or slightly lower than this previous high from last week. And so we just want to be cautious. We want to be aware. We want to be looking for those things. Now, the volatility index, now today the market's been a little bit more on the bearish side of things, hasn't it? So what do we think the volatility has done? Well, we probably would imagine there's going to be a bullish candle when we pull this chart up here. And you can see kind of the low area for the VIX has been around 14 or 15, maybe 16. And I'm going to just zoom in after the extreme movement there in March. And so kind of when it's been in above 20, okay, 18 to 20, so then we'll go, maybe the VIX is starting to get a little bit high. So there have been a couple of times that it has been a little bit high on the sharp pullback we had last week. It spiked up there to 22. And today it looks like it's sitting about 17 and some change. So it's still on the lower side, but we want to pay attention to the direction. Is it popping up here? Is it going to pop up again tomorrow and the next day? We want to identify what kind of the trend is going on there. All right. Let's take a look at one of our first examples. 3 weeks ago, maybe it's just 2 weeks ago. 2 weeks ago, we updated our watch list that we use in this class. If you missed that class, that's okay. You can go back to the archives. You can pull that up. I'll also have a link when I finish my comments for our show here today. I'll go ahead and put a link into that class so you can see what the process was for us to create this watch list. And the stocks that we use in our class come from this watch list. And I'll just tell you in a nutshell, they are subsections of the S&P 500, the NASDAQ 100, and a public watch list that Thinkorswim has available on it that's called penny increment options, which basically lists stocks that are trading in penny increments. That goes back to the liquidity of the stocks, lots of open interest. If a stock is not trading a lot of contracts, they might trade in 10-cent increments or 5-cent increments. But if they're trading in penny increments, right, it's like 207 by 215 or something like that. You're like, oh, good, it's in pennies, which typically means there's going to be a narrow bid-ask spread. We love to see that as traders, okay? Now let's see, Bruce, you guys are making a couple of suggestions here, maybe things that you're not, so you're maybe a little bit more bearish on, because Bruce said meat, Beyond Meat died. We actually won't be pulling that up. I don't think that's a stock on our list. Let's see, Thea says Crocs as well for today. I don't know if Crocs is on our list. I'd have to alphabetize it and see. But I've picked out some that are on the list that are making a couple things. One, they've got existing downtrends, and today they have what some might use as a bearish entry. Is it your favorite thing to use for a bearish entry? We'll see. We're going to look at a couple of possibilities here. So the first stock that we're going to take a look at, we're going to look at CRM. Now, CRM, you can see in the last month, let's get that little message off of there. The last month, that's this column here with a script, is down about 9%. Over the last 3 months, it's been down about 13%. So it's just kind of showing us some short-term weakness. And here on this chart, it goes back to February, so it's about a 6-month chart. We can see, over the course of that period of time, that's what it's been doing. So it's already been downtrending. Our 30 and our 10 are pointed down. And then we had kind of a break of, and maybe even a bounce off this resistance line here. It had acted as support, that 255. Then the other day, kind of broke through it, but with this candle here, maybe it's a little bit uncertain to know exactly what it was doing. And today it looked like it kind of ran up to here, tested that resistance, and then pulled back a little bit. Okay, so this is something that some traders might use for an entry signal. Now, yesterday, I taught a class in our index options, and I taught them a tool that we're going to use here today. And I said at the beginning, I'm going to introduce you to a tool that may make a difference or may alter the way that you look at technical analysis, specifically for short verticals. Okay, I'm going to show you what this tool is. We're going to go to our studies, come over here, and I'm just going to start typing in here. And we are looking at the probability of expiring cone. Let's bring this over. Let's tell you about it. So double click, get it on there. We're going to hit, let's see how big it is. I think I'm going to make it a little bit larger than a 1. Let's make it a 3 so we can see it here a little bit better. All right. Oh, let's see. Let's get this maximized here. It looks like it is a little on the small side. Let's get that guy open. Thank you. Thank you. All right. So what we're seeing here, look at this on the side. I have actually not as much time as I thought I had. Let's give us a little bit more time. Let's go into our chart settings. Let's go into time axis. Oh, I guess it is giving me 20 bars. I like to see about 20 bars out there. I see why it was looking a little different here for me. Okay, I'm going to zoom in maybe along here, but notice probability cone goes out in time quite a bit, right? So we're just going to look at some of it. All right, what does this probability cone represent? It represents 1 standard deviation from the mean. Now, many years ago, maybe you took a statistics class. Maybe you didn't take a statistics class, but one thing they teach you in a statistics class is probabilities of a bell-shaped curve and how those work. So I'm going to do a little bit of drawing for you today. I am not the best drawer in the world. Okay, my sisters have really, and actually my brother too, have pretty good artistic talent. I kind of fell up short in the, artistic talent area. But I'm going to do my best here. My sister's not here to draw it for me, so we'll just have to deal with it. Now I'm going to draw you what I'm going to say is a bell-shaped curve. Okay, and the bell-shaped curve basically says, where are the points of data going to lie? In the middle, we have a mean, which basically means the average. Okay, so right down the middle is our mean, and then we're going to have 1 standard deviation from the mean and 2 standard deviations from the mean. Now I'm going to come in here, I'm going to draw approximately where a 1 standard deviation might be. And you need to know it represents about 34% of data points on the right side of the mean to the line, and on the left side, 34%. So we would expect basically 68% of the data points of whatever it is that we're analyzing or looking at to be in that 1 standard deviation. Now, 2 standard deviations goes back even a little bit further, and it'll encompass about 96+% of the data. Okay, so this amount is 1 deviation. Over to here is our second channel deviation. Okay, so a lot more data is coming out, and then the very ends, we call those the tails, and there's just usually like a few little outliers here and there. Now, when I put the probability cone on here, basically we're looking at this bell-shaped curve tipped over, okay? Just like we rotate it a quarter to the left, and that's what we're looking at. But I wanted to have a little bit of context for what we're seeing here, okay? So that's the end of my drawing for the day, we hope. All right. So can you see that now? That's our probability cone. And what it'll do for us, it'll show us where do we expect price to be within 1 standard deviation of the mean on certain times at certain dates. Okay, so if we were to come out here, say a week, today's the 7th, so I'm going to go to the 14th. That'll be a week from today. Our expectation would be that maybe the price of this stock might be between wherever that top is, which looks like about 252 and change. And then I'm going to come down to where it hits the bottom on the 14th. That looks like maybe about 225. So that's where we would expect the range of motion to be on this stock. Now they have earnings. Their earnings are not going to be until the 27th. Okay, we're sitting here on the 7th. 27th, we've got about 3 weeks before it actually hits that. Some of our trades have executed pretty quickly and hit their target percentage goals. Some have done it in the same week. Some have done it in a couple of weeks or even 1 week or a couple of weeks. So what we're going to look at here, we could say, well, what would it be before it gets to options expiration and work with that? Or we could say, you know, let's just go where we think the stock might not go in a period of time that we think the trade could execute. So what we're going to do, we're going to go out 14 days. We're going to go out to the 21st of August, which will actually be a little bit before the earnings. And let's see on this top side where the high price could be. Okay, so I'm going to go here to the 21st. Get my mouse in the right spot. There's the 22nd. There's the 21st. And this is coming in around, let's see here. I had about 260 before, and it is right now about 259. Okay, so what would be a little bit higher and beyond 259? Well, maybe 260, 270, 280, right? These values up here that are higher than 259. Okay, so we're going to keep that in mind as we go over and look at the trade tab and see what kind of options might be available for us. Now, we know any of these stocks that are on this watch list, we've already determined we would like to, we're ready to trade them because they're liquid, they meet our rules. This kind of a trade, we're looking and relying a little bit more on our technical analysis and our probabilities than what we are as far as other things like fundamentals. Oh, does the stock have a good story? Things of that nature. Because we're working with stocks that you've seen in the news all the time. Okay. All right. Let's see. John says, what are the changes in price relative to? This is the change of price, John, that probabilities say that the price of this stock could go to in whatever period of time. So, you know, if you were somebody, maybe it was a little bit longer term holder of a stock or something like that, you might come out a lot further than I did, right? You might come out further and you might say, well, what do I think it's going to be, or what does it look like it could be, the potential of it, by November 1st or whatever date you want. Okay. Obviously, it's the further out in time we go, the wider that range could be, at least for what we know right now. Okay. Data changes, price is going to change. And as the price changes, this little cone is going to shift and adjust. Okay. Lola says you've never really appreciated math until you started utilizing it in your trading. Awesome. Maybe you do have a thing for math. Maybe you're okay there. You just didn't know that you were awesome at it. Okay, let's go over to the trade page. And let's look at, not that, because we're not there yet. Traded over 6 million shares today, so pretty liquid. It's got a lot of weeklies. And we could look in the weeklies. I did earlier. Some of them have okay open interest, but not all the strike prices that might be best for us. Okay, so what we're going to do, we're just going to go out to September 19th. This is a monthly, it's got 43 days, so it fits really nicely in that window of 20 to 50 days that many traders like to use when they're selling premium. Let's look at the implied volatility. Would you say that's high, low, medium? You know, anything above, say, 35%, many times we'll consider higher probability. These are not that extreme. We'll work with other stocks that are in the 60s and 70s and 80s. Okay, this is just kind of down in the 40s. So it's a little bit high, which means premium might be nice. They're not going to be as juicy as possibly can be because there's not a ton of volatility in them. But yeah, we should be able to find something here. All right. Now we're going to open up this with September 19th that do have 43 days, but we've got the mindset of we're not going to go out to September 19th, even though that's where the probabilities could go to theoretically, right? If this till this option runs out of its time. But in our mind, we're thinking, yeah, maybe just for a couple of weeks is all we're going to need to hold this trade. All right, so let's open up the options here. We've got 20 strike prices. And so we're going to go out here looking what was beyond 259. I think that's my magic number. Let me just check my notes to make sure. Yeah, 259. So 250 is a strike price. That's not higher than 259 where the cone came in. 260 is a little bit higher. So is 270. So is 280. And so we might consider maybe any one of these depending on how aggressive or how conservative a trade we wanted to put together. For our purposes, let's start here at the 260. That's just kind of a notch up on that probability cone. And quite honestly, we're not looking for the stock to go up. We're looking for the stock to drop. But we still want to be aware of theoretical probabilities and where they might lead. Okay. So on our 260, let's come out here. Let's notice it happens to be a 31 delta. It also happens to have, this is my probability of expiring out of the money. Also here, 74%. So right now it has a 74% chance of expiring or probability out of the money. Is it guaranteed? Nope. There's the 26 on the other side, 26% chance that it doesn't work out for us. Okay, but pretty high probability to begin with because many traders will start at 60 and higher for that. So let's go here. Let's do our sell, our vertical. Oops, I must have hit buy. So let's just change it here. Sell our vertical. And I'm going to lock it in place here with 220. We're going to make it easy on our math here. Okay, so we are willing to, we're going to bring in $220 credit per contract that we do. And our expectation is that, you know, hopefully the stock will drop because that's what we were looking at in our technical analysis and trying to get an entry just as it's kind of bouncing down off resistance. Or it could be sitting at resistance. Some traders don't mind that either. Let's pull up. I'm going to collapse our watch list. I'm going to pull out our calculator. And let's see what kind of a return that might give us. Okay. It was a little bit higher earlier, but let's go. This is 220 is our max theoretical gain. we've got to take our max theoretical loss, which is going to be 10 minus the 220. So that's going to be what, 680? 780. I think it's 680. I'm going to do, we'll let the calculator calculate it. Oh, calculator's supposed to calculate that. 10 minus 2.2. Okay, yeah, 780. So we're going to take our 2.2, divide that by 7.8, our max theoretical loss. That's going to be at 28% return. Now, there are going to be some people that are good with that trade-off of a higher probability trade and maybe a payout that's not quite 30%, but maybe close to 30%. There may be some people here that are like, I really want 1% for every day that's left in the options before they expire. So there could be some of you that may say, okay, I recognize that probability cone is there, but I want a better return. Okay. And so you might slide up here, maybe to sell the 250 instead. Or if somebody wants the higher probability out here at 82%, they might say, no, we're going to sell the 270. Okay. So you get to decide, how conservative or aggressive of a trade that you want to set up and how high you want the possibilities to do. So how do you do the second leg if he says, well, what I did here is I just did a right mouse click on the price. And I'll just do that again. I went to sell, and then I came up on this column and I selected vertical. Okay. And it's populating it in here again. So I'm going to get rid of it because we just want to see one of them. Okay. In this class, we're willing to risk $1,500 per trade. Here, we are going to be risking, what did that end up being? 780? Which if we take 780 times 2, that's going to get it just a skosh beyond our $1,500. So we're just going to do one contract here. That's all right. We don't mind doing one contract. We're good with that. So let's go ahead. Let's change this to a first trigger sequential. Let's go ahead. Let's put an order to get out if we get a significant portion of our 220. If we get a significant portion, we want out. We want to kind of lock it in and move on, find another opportunity. Okay. We talked about this in previous classes where we don't want it, we're not going to sit around and wait to bleed out every last penny on the trade. When we get a good chunk that we're like, yeah, I like that, we're going to close it out and we're going to move on. Now on this one, let's use 75%. When we get 75% of the 220, let's suppose we're going to be content there. Can we change that? Of course we can change that. Okay. We'll go 0.70, actually we'll go 0.25 times 2.2. We're going to do 25 because only 25% is left after we've been able to capture 75% of it. Okay. So that says we need to go buy it back for about 55 cents. Okay, 55 cents it is. And we would be happy campers and happy to lock that in, move on with the trade. Okay, we are going to make our buyback order here, good till canceled. And we'll just let the software go out and try to capture that for us. And we want to make sure we're putting this in our bear short vertical bucket. All right, makes it easier for us to capture. I know the premium changed a little bit here when I loaded that second trade. So we'll give it an opportunity to maybe wiggle around a little bit, see if we can't get filled at that price. All right. This is a short call vertical, John. Yes. We're working on the call side of things. We sold the 260. We bought the 270 as our hedge leg that created that credit for us. As soon as it gets filled, it goes right in our account. All right, I'm going to just maybe do a little erasing on my scratch pad so I can do some math in there. I do hope all of you have these columns that I have in my watch list, the 1 year and the 1 month and the 3 month calculations. If you don't, I'm going to post those in here. To those of you that are here in the live chat, remember anytime we share a script, it's never guaranteed as to accuracy or timing. Did I hit a fat finger there? I put in 5, well, let's fix it. Instead of 55, I put it in at 555. I got an extra 5 in there. Actually, it looks like it changed back to our 215. Let's do a cancel replace. Huh, that's interesting. Yeah, right now it's trading for 215. And we wanted to buy it back at 55. No. Yeah, we're going to buy it back at 55 cents. We're going to be content to just bring in a portion of that premium. So let's fix that. I don't really want it at 215. Thank you for letting me know that that kind of came out of there, which was a little bit strange. Okay, now we're going to send this on, and it should match up to our initial order there. Okay, so as we come over here to the monitor tab, let's just check that out. And so we see our 220. And if it gets filled, then we're interested in, if we get 75% of it, out we go. We'll buy it back for 55 cents. Okay, next trade on the list. I think there's some other ones from our watch list here. I think there are. Let's open up our watch list, maybe close the calculator for a minute. And let's go down to another stock that's here on our list. Let's come down. Where did he go? Adobe. Here's Adobe. It struggled in the last, over the summer, it's just kind of struggled. Lower lows, lower highs, lower lows, lower highs. Their earnings are not until the 11th of September. We have plenty of time for this trade to work, execute before it comes into earnings season. Okay, so we're happy about that. But the same thing here. If we think, maybe we might only be in it 2 days, after all, stocks fall out the window and climb upstairs, meaning sometimes they drop really quickly, but they take a little bit more time to take the stairs going up. Okay, so our expectation here is essentially the same thing. It kind of went a little bit sideways here. It looks like maybe something in this area might be acting as support, but it looks like maybe it's breaking through that right now. Okay, so some traders might look at that for the technical entry. Okay, so let's do the same thing here. I'm just going to maybe zoom in, and we're going to go out again 2 weeks. We're going to go out to the August 21st. Again, we're going to be on the top side here, and I've got 20 days there. Okay, my mouse is on the 21st, and let me get as close to this as I can. And that looks to me to be about 362. So what's higher than 362? How about 365, 370, 380, right? Selling a call, kind of in this upper area. Our expectation is it's going to drop, but in that probability cone, it says, well, probability-wise, it could go a little bit higher, and this is maybe a range where it could possibly go to, theoretical in nature, okay? So that was what was that, 255? I believe I said. Or no, it was 360 something, right? 363, 362, because we were saying 365 might be the next, a little bit higher. Let's go and look at the option chain. On this one, we're going to go out on September as well. And there is some liquidity here in these options, but just not an abundance. Okay, so yeah, there are some, but they're just not a lot. We want to be out where there's lots and lots of fish. Okay, so we're going to come out here. Where do we have a 365 here? We do have a 365. It happens to be a 31 delta, and there's enough contracts out there. 258. We're going to do just a handful. So yeah, absolutely, this could work out here. So let's see. Let's just see what these numbers look like. If we sell 365, so we'll go up here, we'll say sell vertical. We're going to go buy the next strike price, 370. It's going to give us a $1.20 credit on a $5 wide spread. Now, some of you in your brain, you're going to know if it meets your criteria or not. I'll tell you right now, if this were a $1.25, I know a $1.25 divided by the max theoretical loss of 375, so $5 minus the the credit, if it were 125, would have come up to 33%. So this is probably going to be similar to what we looked at on our last calculation. Let's see how this fares here. So $1.20 divided by 380 gives us 31%. Okay, so you get to decide, does 31%, is that enough for you? Okay, if it's not enough for you, you might change, right? If Bruce said in here, yeah, let's see, one rule that I haven't seen into fruition is where there is a conviction you should overweight the trade by the 1% rule. I don't know about that, Bruce. Yeah, you'd have to do some testing, let us know. Okay, but if you want a 1% for how many days of expiration that are left, somebody would be looking for, say, a 43% return. We're going to be content with 31. Okay, especially we're not intending to be in this that long. We'll do a first trigger sequential. If 380 is our loss per contract, we'll take 1,500. Let's divide that. Ooh, that's 15,000. Let's go 1,500. Divide that by 380. How many contracts can we do? We can do 3. So we're going to do 3. Here, some of you might be tempted to round up to 4. We're going to be Johnny on the spot with ours. We'll do another first trigger sequential. We'll create an opposite order here. And when we get a chunk of 120, we're going to be happy campers. Okay, so let's go 120 times, let's go for 70% on this one. When there's only 30% left, then we want to buy it back at 36 cents. Great. Let's have our order sitting out there for 36 cents. We're going to make it good till canceled. We're going to put it in our bearish bucket. When we get to the next page, so we'll put it in our bearish short verticals bucket. We'll send that in. Looks like it got filled. After our class is over, I'll go back and see what we need to do with the first order, because I don't think I heard the lovely ding yet that it's actually been filled. Now, I'm going to point a couple of additional things out to you before we go to our check a couple of existing trades here. So something else that might catch some of your attention that is on our watch list is Lululemon. Okay, Lulu struggled, gapped way down on earnings. They do not announce their earnings until probably about September 4th, right? So another month from now is when they announce. So could that be plenty of time for something to work for us? Absolutely. Okay, so if I do the same thing, come in here, say the 21st, I'm going to write down a value here of about 210, 211. Okay, maybe for round numbers, would say 210 on that. And if you wanted to do a practice trade in your own paper money account, do the same thing we did in the other 2 trades. When I come back in after our class is over, I'll be putting in this trade, okay, as an example trade for us that we can track and follow and learn from. A couple of other names on our list, Disney. Maybe let me just change this to 3 months here so we can kind of see what's going on with Disney. It looks to me like maybe the next area of support down is going to be around 108-ish. Okay. Looks like it did what? Looks like it maybe broke some support through here, having a down day. Some traders might like that as an entry. And then the last stock you might want to take a look at is PayPal. What's going on with PayPal? Kind of similar thing, disappointed at earnings and just has had a hard time recovering and getting back. It tried to rally, kind of got up here near the 10, and it looks like it's just bowling back over. We've got a bearish engulfing candle here. So the momentum seems to be shifting a little bit. That run up didn't last for very long on PayPal. Okay, so those could be one that you consider. Stephanie, you said you came in late. How do you get the probability graph on the right? Go up to your studies and type in probability of a probability cone, and that study is going to come up for you. Okay, now we have a couple of trades that are working still for us. Working still for us is, let's go over to, let's collapse this. Cisco, it's just working for us, but with Cisco, we only have 8 days worth of time left. So we need to find an exit. Okay. See, we do not want Cisco to be sitting in there when we come back next week. Okay. So we've got an automated exit there, but we probably don't want to hold on till the very bitter end. Okay. Is it doing what we wanted it to do? Well, it's kind of gone a little bit sideways. It hasn't gone bullish like we would have hoped and expected, but it is staying below or above its short strike price. Okay, so it's in good shape. Let's give it just a couple of more days to work. And then the other one was PDD. We're a little bit up on PDD. And on PDD, that looks like I've got a couple lines in there. So it's well above kind of this area of where we wanted the stock to stay above, right? Because we sold here on this day. So it's marching along, just kind of doing its thing. It has a little bit more time. We're not so pressured with it. It has about 22 days before it expires. Okay. Now, I hope all of you feel a little bit more comfortable maybe utilizing this tool, the probability cone. There could be some people that are like major probabilities type people that they might really get into this. They might go, yeah, I really like that, because it can complement what we're seeing out on the option chain in terms of using the delta, probability expiring out of the money, especially. Okay, that probability cone fits right in there. Now, I do hope that you're following us on X. I hope you're a subscriber to our Trader Talks channel, because that's where you can find our playlists, what we've taught in the past. You can go look up that class. Somebody said, hey, how do I go find that class? Let me show you just super quick. Wrong tab. Let me get the correct tab here. If you are a Trader Talks subscriber, pull up our playlist, come down and find the short verticals. It was on the 25th of July that we ran and updated our watch list. Okay, so makes it easy once you're a subscriber. So take advantage of that. Now, you guys have been great. You've had some fantastic questions here as well. Cameron, thanks for helping us out in the chat. These guys weren't too bad for you, were they? Ricebird says, could you share the class where you set up and develop the watch list and scan? Yeah, Ricebird, that was on July 25th. It was in July 25th class. You go back to those archives, you'll see it. You'll be able to run it. And you too can use this for the next couple of weeks because we're going to use it in our class. Thank you, everyone. Mike Fairborn is going to be up next. We're going to have a little break in our programming. So come back at the top of the hour after you get a snack and, you know, maybe a Diet Dr. Pepper with coconut. That's kind of my thing these days. Go ahead, get a drink. We'll be back here right at the top of the hour. Mike Fairborn will have those scripting studies for you. We'll see you then. Bye-bye.